Good morning, everyone. My name is Thomas Nam, CEO of ESR Kendall Square. Next to me is Jian Kang, our CIO. Today I go over some highlights of ESR Kendall Square with our performance and capabilities and how they translate into success through a few cases of our assets. Then Jian will address some of the major themes and outlooks relevant to the Korean real estate market and its ever-growing potential. And I'll come back and cap it off by addressing our key priorities that we have set forth for year 2023 and onwards. ESR Kendall Square is Korea's #1 market leader in logistics development and asset management that incorporates a fully integrated real estate platform that has allowed us to amass a portfolio of about 5.6 million square meters of GFA with an AUM of $11 billion. We have two asset management companies under ESR Kendall Square. Kendall Square Asset Management is responsible for management of private funds, while Kendall Square REIT Management handles the asset management duties of ESR Kendall Square REIT that we launched in year 2020. On the right-hand side of the slide, you can see the location of our assets in Korea. Each of our assets are positioned in strategically critical and very well-established logistics clusters in Greater Seoul and Busan area. Greater Seoul is the largest metropolitan area in Korea that accounts for nearly 50% of the national population, while Greater Busan represents the second largest metropolitan area. Looking closer at the map, on the immediate west of Seoul, our infill assets offer the premier role of last-mile delivery points. And to the southeast of the Greater Seoul area, where nation's most traveled road infrastructures intersect, our asset cluster offers essential storage and distribution functions for more traditional 3PL activities targeting all regions of the Greater Seoul area. Lastly, looking at the bottom of the map, our assets in Busan hold valuable locational positions to penetrate the nation's second largest metropolitan area in the Greater Busan region. Now to provide some high-level figures of our firm, our portfolio occupancy stands at 98%. We had a very strong leasing activity last year with about 500,000 square meters of leases signed, and renewals were signed at about 20% reversion rate. As Philip mentioned, actually this is probably the highest increase in my career in the logistics sector in Korea as well. While we have an expensive portfolio of assets, we still maintain a strong pipeline of projects with $1.7 billion of dry powder to execute them. Our strong pipeline is further evidenced by our progress in new economy development, which hasn't shown any sign of slowing down, marked by the size of our development workbook, which amounts to about $1.7 billion. Regarding our competitive competencies, we can categorize into 4 areas shown here. Onto our business model, similar to other business units across different regions in ESR, ESR Kendall Square is fully integrated real estate platform is what differentiates it from likes of others. On development, our platform encompasses all areas of real estate development from deal sourcing to leasing, all the while providing asset management and fund management to provide our investors with solutions for long-term sustainable returns. On active management, on top of all that, each aspect of our platform is spearheaded by industry experts with over 20+ years of relevant experience. On our capital partners, we have also maintained a very amicable relationship with our capital partners since the inception of our first joint venture in year 2015, followed by continuous upsizings and new joint venture establishments amounting to a total equity commitment of over $4 billion. All this is what defines our position as Korea's clear-cut leader in logistics real estate, with coverage of all risk spectrums in development, value add, core, as well as in publicly listed REIT. Pass on to Jian.
So let me highlight some of the key elements just Thomas just discussed and go into a little deeper. First of all, I wanted to highlight the breadth of our tenant relationships and our customer base. We have currently managing about 3 million square meters of operating assets, fully stabilized. Within that portfolio, we have close to 100 unique customers. That some that includes global 3PL such as Siva, DB Schenker, DHL, LF Logistics. Also, Korean top retailers and manufacturers such as Coupang, Samsung, and SSG. And through this relationship, some of the achievement we made with these key customers are like, for example, we signed 200,000 square meter lease with Coupang. It's probably one of the largest lease ever signed for Korea. Also, we recently completed a comparable size lease with SSG.com, which is largest brick and mortar and e-commerce platform in Korea. The next page, so two key operational highlights. First from the fund management AUM side, now as of last year, we are committing about 11 billion USD of AUM throughout our the capital programs, including our listed K-REIT and our value-added income JV, also our development platforms. And also on the development front, we have about 5.5 billion square meters of GFA, out of which 3 million square meters is completed and operating, and we have about 1 million square meters under construction, and we have about 1.5 million square meters of GFA coming from land we already secured. I wanted to highlight our past achievement through some of our case study projects. First of all, this is the Bucheon Logistic Park that we have learned. This was the seed project for our entire platform, also the seed asset for our first development joint venture that has started in 2015. So it has marked many of the first within the market. It was the first infill, fully ramped up the speculative development in Korea. It was the first one that was speculatively financed within the Korean logistics real estate market. Also in the ESG front, it was the first to achieve LEED certification for the warehouse in Korea. Also, first well-certified logistics asset throughout the Asia. And second one wants to highlight our capability to turn around assets that we bought from our value add strategy. This is the asset we bought with the 7-year-old asset. At the time we bought this asset, it was undermanaged, but we were able to re-tenant the entire asset with the roster of very key customers such as Coupang, GS, and Home Plus. Also, we had upgraded all the amenity spaces, including the rest areas, cafeterias, which these modern amenities now required. So through that, we have probably achieved a significant margin over our acquisition price. And third case study I wanted to highlight is the example of realizing embedded upside within a logistics asset. So this is the asset we bought from a third party. It was originally designed as a logistics asset, but we were able to, this was such an infill location, and it was a close proximity to some of the data center clusters within the Seoul metropolitan area. So we were able to lease half of this building to the global cloud operator. With that, we have probably increased our rental income about 30%. Let me toss it back to Thomas on some of the key takeaways.
Okay, thanks, John. Yeah, let's look at the key takeaways. First point, ESR Kendall Square has never been in a better position to succeed and maintain its dominant market presence in Korea. What we have discovered over time is that COVID's impact on the emergence of e-commerce in Korea has been a systematic one. We have witnessed not only the rapid growth of the e-commerce industry itself, but also the consolidation of market share by key players. Requiring more advanced logistics space that allows for optimized operations, which ESR Kendall Square is more than capable of providing. Our leasing success speaks for itself, as we have fully leased more than 500,000 square meters of logistics space in year 2022. Point two, however, even with the growing demand for advanced logistics space, the supply has slowed down, as many of you may be aware, due to the current state of financial markets. While this may be concerning, we have been able to adapt and identify opportunities in large-scale developments and land banking projects, all of which have become more and more valuable with the current slowdown of financial markets and development permits. Thirdly, another area of concern, as most of you may already know, is the impact of cap rate expansions in the market. While it is true that there has been slight expansions in cap rates, strong top-line revenue growth from market rental surge has helped mediate interest rate hikes, while also providing healthy returns and great value enhancement potentials. And with that, we plan to continue utilizing our virtuous capital recycling platform through both public and private investment vehicles, covering all risk spectrums, including development, value add, core, and our listed REIT. On ESG, however, we don't plan on losing sight of our ESG values that we have probably represented since the company's beginnings. In fact, we've been participating in global real estate sustainability benchmark developer evaluations since year 2017 and achieved first place in the Asian warehouse category in year 2018, 20, and 21. We are committed to increasing long-term values by putting ESG principles at the forefront of its management activities, and will continue to do so in the future.
Let me cover briefly some of the supply and the demand market conditions within the Korean logistics market. In the first slide, on the left, shows the supply within the Seoul metropolitan area. Considering the size of economy and population, the market is characterized by growth undersupply for many years. I mean, as you can see, market has been only supplying 1 to 2 million square meters a year of the new logistics market. And on that graph, the last year, 2022, we have a little bit higher than average supply in the market. And again, 2023, we probably have a comparable delivery in the market. But going forward, if you see the graph underneath, the new development start going forward is very limited, being that on this year there's basically no new development starts. So going forward, with the also coupled with the very restricted zonings that are implemented within the Seoul metropolitan area, the supply we think is very going to be even more limited than prior years. And also, if you look for the demand side, this chart shows some of the new leases and renewals that we have executed past year. And as you can see, it ranges from low teens and as high as over 30% upward revisions of our rental rates when there's renewals and new leases on the same space. So the demand has been very strong. And the next one shows some of the demand drivers for our products. And first and foremost, there's a growth of e-commerce, as shown in the left chart. It's absolute growth of e-commerce. e-commerce sector within Korea, which has shown like 20% also CAGR growth for past 5 years. And even more importantly, for the demand, our product is coming from the major e-commerce players, and the expansion of those consolidation and expansion of within the e-commerce sector for our key customer has been growing even more rapidly. So probably top 5 customers take on less than 50% of the entire e-commerce. Now they are taking over 70%. So our demand for our space has been basically double rate of the general e-commerce growth, probably something close to 30% or so over the many, many years. And go to the next page, there's beyond this, the top the general purpose e-commerce companies, there are other players that they are creating new demand for our products, such as quick delivery companies who requires last mile locations inside the city. Also, growth of e-commerce platforms such as Market Curly, and also sector leading e-commerce specialists in each of the industries, such as in fashion, there's a company called Musinsa, who is a consolidator within that particular market, and there's a luxury good e-commerce platform such as the Trendy, and there's a household goods e-commerce platform called O-House. So those kind of these consolidator within each sector in each e-commerce is generating quite a big demand, and we are signing leases with them in recent years. On top of the general 3PLs, these traditional kind of users and of our customers, our product has been showing a very strong growth for past 5 years, evidenced by the leading firms growing by CAGR of close to 20%. So let me hand it back to Thomas for the key priorities of 2023.
Thanks, Jian. Facing these exciting opportunities in Korean market, we have set forth some initiatives that we believe are key in further establishing ourselves as the real estate development company in Korea. First off, our focus is to strengthen our fundraising efforts through new private fund offerings, including the new open-ended core fund we plan to launch within this year. We also plan to continue deploying everything in our platform's arsenal to continue development projects, as well as value-add strategies to provide promising returns to our investors. Another priority we are looking to expand on is our dedication to our development pipelines and land banking projects, all the while maintaining high occupancy and revenue growth from leasing. However, we do want to maintain a broad outlook on all opportunities, including but not limited to distressed assets from undercapitalized domestic developers. And last but not least, furthering our ESG values into everything we do by creating business opportunities in renewable energies. This concludes our presentation for the Korean market. Thank you for your attention, and we'll move on to Q&A.
Yes, thank you, gentlemen. We have 2 questions. Okay, the first question would be, can you please share more about the outlook of the development margins, yield on costs, rents and cap rates, given the impact of higher construction costs, as well as in the context of the upcoming supply?
So development margin and yield on costs. So historically, it's going back to when we were starting back in 2015, we've been underwriting deals at that time, probably something like 8% yield on cost for our development projects, and probably underwrote exiting at around 6% cap rate at that time, like it was like 8 years ago. That delivered, so we underwrote basically normalized 20-30% margin. But what happened in the market was there was a growth of rental rates and a couple with those cap rate compression. So what we end up delivering for those our early project, we were achieving some of the cases like triple-digit margin on our projects. So we have been consistently delivering margins over 50%, sometimes close to 100%. And these days, there has been the top line growth is significant, and we are seeing like 20% year-on-year upward renewals of our rents. So rental growth has been very, very healthy. It's even better than past 5 years. But construction costs probably had risen for past 2-3 years around 30% or so, and also cap rate in a way it's very tricky what the market cap rate is, because in past prior to inflation rate and the interest rate rises, anything logistics was selling at very high prices. So I would say that has any logistics asset, if we will stabilize, probably selling at around 4%. But after this environment with the higher inflation and higher interest costs, our investors are starting to differentiate products. So the people favors all times the most highly valued asset would be some of the ones with a master lease and a very long-term basis. But those assets are now out of favor because they are not having enough. They don't grow because they are built-in rental step-ups only in the range of 1 to 2%. So it's not really catching up to the market. So the popular asset these days are assets that can actually realize upside in the rental growth. So those assets still trading around 4%. And some of the assets that doesn't provide those upsides sometimes trade around close to 5%. So the market is starting to differentiate, but we are probably looking at on average, probably we can say there's about 25 bips of expansion in the market, which is not much of the increase, and the capital value has been holding up. So nowadays, the development margin, I would say, is being normalized back into anywhere between 20 to 30%. And for our portfolio and our new deals, we are right now we are probably underwriting at the yield on cost of around 7% at today's rent, and the probably conservatively we are underwriting exiting in around 5%. Although in the market things are still trading forwards.
You know, we are very happy to see that our core assets are surprisingly still holding our value at almost a pre-COVID level as we are trying to convert our assets into a new core fund. I think you know, we really are not really seeing the cap rate expansion. So I think that's good to see that these very quality assets are still holding its value.
Okay, and this leads to the second question would be, what are some of the major recent transactions in Korea's real estate logistics that you can share?
One of the biggest transactions has been coming from actually within our portfolio, such as the past year we have actually did a $400 million transaction with our REIT, ESR REIT. That was one of the biggest, and the most biggest one was 3 years back when we were listing our REIT. There was $1 billion transaction at the time, and $1.5 billion gross value. So that was actually probably the biggest transaction that happened within Korea risk market.
Okay, and with that we conclude on time as well. Thank you very much,
Right.
gentlemen.
Thank you. Yeah.